A confirmed change to Medicare Part B went into effect on January 1st, 2026, and it is already reducing the size of the monthly Social Security check for tens of millions of Americans, including many who have no idea the deduction increased. The standard monthly premium for Medicare Part B climbed to $202.90 in 2026. That is nearly $18 more per month than it was in 2025. For a couple where both spouses are enrolled, the combined increase is $36 every single month, money that no longer arrives in the bank account, quietly removed before the deposit ever lands. If you receive Social Security Retirement Benefits SSI or SSDI, and you are enrolled in Medicare Part B, what comes out of your check each month just changed. And there is a second layer to this that affects a specific group of beneficiaries far more severely, one that most coverage of this topic stops short of explaining. Everything in this report comes directly from the Centers for Medicare and Medicaid Services final notice published in November 2025, the official CMS fact sheet on 2026 Medicare Parts A and B premiums, and the Social Security Administration's published guidelines on how Medicare premiums are deducted from benefit payments. No opinion, no speculation. Stay with me through the end, because there is one element connecting your Medicare premium directly to a tax return you filed 2 years ago, and it is the piece that is quietly adding hundreds of extra dollars to what some seniors are paying without them ever understanding why. Medicare does not send a personal phone call when your premium increases. The Social Security Administration does not notify every beneficiary individually when the deduction from their check changes. If you want to know about these updates before they affect your deposit, subscribe now and turn on the notification bell. 2 seconds. Now let me walk you through exactly what changed and who it affects most. Here is the background that puts this premium increase in full context. Medicare Part B covers the medical services most seniors use every day: doctor visits, outpatient procedures, lab work, durable medical equipment, and certain home health services. It is not optional for most Medicare beneficiaries. Once you enroll, the premium is deducted automatically from your Social Security payment each month before your deposit is calculated. You never see a bill. You never write a check. The money simply does not arrive. The standard monthly premium for Medicare Part B in 2026 is $202.90. According to the Centers for Medicare and Medicaid Services final notice, published on November 14th, that represents an increase of $17.90 from the 2025 premium of $185. The annual deductible, the amount you pay out of pocket before Medicare begins covering costs, also increased, rising to $283 in 2026, up $26 from the prior year. The Centers for Medicare and Medicaid Services explained that the main drivers behind the 2026 increase were projected price changes and assumed utilization increases consistent with historical Medicare spending patterns. There was, however, a mitigating factor. Changes finalized in the 2026 physician fee schedule final rule significantly reduced projected spending on a category of treatments called skin substitutes, products whose costs had been rising at a pace the agency described as unprecedented. Without that policy correction, the monthly premium increase would have been approximately $11 higher. In other words, the $202.90 figure already reflects a cost containment measure that kept the increase from being even larger. What the standard premium does not reflect, however, is the surcharge that applies to a significant portion of Medicare beneficiaries based on their income. That surcharge has a name. It is called IMRAA, the Income-Related Monthly Adjustment Amount. And it is the part of this story that most beneficiaries do not find out about until the money has already left their check. Here is where it gets specific. And this is the part that most coverage has gotten wrong. The first thing you need to understand is what IMRA is, how it is calculated, and why the number on your tax return from 2 years ago is directly determining what comes out of your Social Security check today. IMRAA Income-Related Monthly Adjustment Amount is a surcharge added on top of the standard Medicare Part B premium for beneficiaries whose income exceeds certain thresholds. It was introduced in 2007 and currently affects roughly 8% of all Medicare Part B participants, according to the Centers for Medicare and Medicaid Services. The critical fact that most beneficiaries do not understand is how the income calculation works. The Social Security Administration does not look at your current income to determine your 2026 IRMAA. It looks at your tax return from 2 years ago, specifically your 2024 Modified Adjusted Gross Income, which is your adjusted gross income from your federal tax return plus any tax-exempt interest you earned. Your 2024 income, reported on the return you filed in 2025, is what determines whether you owe a surcharge in 2026. If your income has dropped significantly since then because you retired, because a spouse passed away, because you sold a property, and that was a one-time event, the IRMAA system does not automatically know that. It is still using the number from 2 years ago. And that number may be placing you in a surcharge tier that no longer reflects your financial reality. The second element is the surcharge structure itself, and the dollar amounts involved are large enough that every Medicare enrolled beneficiary needs to understand exactly where the thresholds sit. According to the Centers for Medicare and Medicaid Services fact sheet published in November 2025, the 2026 IRMA surcharge begins for single filers with a modified adjusted gross income above $109,000, and for married couples filing jointly with income above $218,000. Below those thresholds, no surcharge applies. You pay only the standard $202.90. Above those thresholds, the surcharge is layered across 5 tiers. At the first tier, the total monthly Part B premium rises to $284.10, $81.20 more per month than the standard rate. At the highest tier, for single filers above $500,000 and joint filers above $750,000, the total monthly premium reaches $689.90 per person. For a married couple where both spouses are on Medicare and both fall in the highest tier, the combined monthly premium for Part B alone is $1,379.80. The fifth bracket, the highest, is currently frozen and cannot be indexed for inflation until 2028, meaning the threshold does not rise with inflation the way the lower brackets do. If you worked in a sector that provided significant stock compensation, deferred income, or pension distributions before a certain year, and those payments are being recognized as income now, even in retirement, your MAGI may be higher than you expect. Check the number on line 11 of your 2024 Form 1040, that is your adjusted gross income. Add any tax-exempt interest from line 2A. That combined figure is what the Social Security Administration used to determine your 2026 Medicare premium. People who work with financial planners already know how to manage RMA thresholds. Their advisors run income projections specifically to keep modified adjusted gross income below the bracket cutoffs using Roth conversions, charitable distributions, and timing of retirement account withdrawals to stay just below the line. Most seniors on fixed incomes never hear about ARMA until the deduction from their Social Security check is already larger than they expected. Third, and this is the one that surprises beneficiaries who have already been paying IRMA for years, is the life-changing event appeal, and the fact that it can reduce your surcharge immediately if you qualify, rather than waiting for the 2-year look-back to catch up with your current income. The Social Security Administration maintains a formal process that allows Medicare beneficiaries to request a reduction in their IRMA surcharge when a qualifying life-changing event has caused their income to drop significantly since the tax year being used for the calculation. The qualifying events are specific: retirement or reduction in work hours, marriage, divorce or annulment, death of a spouse, loss of income-producing property due to a disaster or other event beyond your control, loss of pension income, or an employer settlement payment. If any of those events occurred in 2025 or 2026 and caused your income to fall below your 2024 MAGI, you can submit a formal request using the Social Security Administration's designated form, SSA 44, asking them to use your more recent income instead. If the request is approved, your Medicare premium is recalculated using the lower income figure, and your Social Security check stops reflecting the higher surcharge going forward. The form is available directly from the Social Security Administration. You have 60 days from the date of your RMA determination notice to file an appeal through the standard process, but the life-changing event request using SSA 44 can be filed at any time as long as the qualifying event is documented. Now here is the element I mentioned at the beginning, the one that connects your Medicare premium directly to a completely different government system in a way that almost no coverage of this topic addresses. The connection runs through the hold harmless provision in the Social Security Act. This rule, which has been in federal law for decades, protects certain Medicare beneficiaries from having their Social Security net payment reduced year over year as a result of a Medicare premium increase. Specifically, if your Medicare Part B premium is deducted directly from your Social Security check, and if the dollar amount of the premium increase in a given year would exceed the dollar amount of your annual cost of living adjustment, the hold harmless provision caps your premium increase at the exact dollar amount of your cost of living raise. In 2026, the Social Security cost of living adjustment was 2.8%. For a beneficiary receiving $1,000 per month in Social Security retirement, the 2026 COLA added $28. The standard Medicare Part B premium increase was $17.90. Because the premium increase was smaller than the COLA increase for most beneficiaries, hold harmless did not need to activate broadly in 2026. Most people received the full COLA and absorbed the full premium increase. But for beneficiaries receiving very small Social Security payments, particularly those who claimed early or who have gaps in their earnings record, the COLA dollar amount may have been close to or less than the premium increase. Those beneficiaries need to verify that their net payment after the premium deduction actually increased rather than stayed flat or declined. The Social Security Administration handles this calculation automatically, but it does not issue a personalized explanation to each affected beneficiary. You find out when you look at your deposit. Consider someone like Eugene, a 72-year-old retired school custodian in Arkansas who receives Social Security retirement and is enrolled in Medicare Part B. His monthly Social Security payment before the 2026 COLA was $840. The 2.8% cost of living adjustment added approximately $23.50 to his monthly benefit. At the same time, his Medicare Part B premium increased by $17.90 from $185 to $202.90. His net increase in take-home deposit was approximately $5.60 per month. Eugene was told he received a 2.8% COLA. He expected his check to be meaningfully larger. When the deposit arrived, and it was barely different from the prior month, he assumed something was wrong. Nothing was wrong. The Medicare premium increase absorbed the overwhelming majority of his cost of living adjustment before the deposit was ever calculated. Eugene is not unusual. This pattern affects a large portion of lower benefit Social Security recipients every time both a COLA and a premium increase take effect in the same year. Step 1. Locate your most recent Social Security benefit statement or your annual notice from the Social Security Administration that was mailed in December 2025. That document shows your gross benefit amount, your Medicare Part B premium deduction, and your net monthly deposit. Verify that the premium deduction listed is $202.90. If it is higher than that, you are paying an RMIA surcharge based on your 2024 income, and you should know which income tier triggered it. Step 2. If you believe your RMIA surcharge is based on income that no longer reflects your current financial situation because you retired, because a spouse passed away, or because a one-time income event in 2024 pushed your AMAGI above the threshold, locate Form SSA 44 through the Social Security Administration's publications. Complete it with documentation of the qualifying life-changing event and submit it. The form is available at any Social Security office or through the agency's online portal. A successful appeal can reduce your premium immediately, rather than waiting for the 2-year look-back to update. Step 3. Share this information with a family member or close friend who is on Medicare and receiving Social Security. Ask them to check the deduction line on their benefit statement against the standard $202.90 figure. Many seniors have never looked at that line closely, and a number of them are paying an RMIA surcharge they qualified to appeal years ago but were never told how. One firm warning before closing. Scammers in 2026 are specifically targeting Medicare beneficiaries with calls and messages claiming their premium has changed and that payment is needed immediately to avoid coverage interruption. Medicare will never call you demanding immediate payment by phone to maintain your coverage. The Centers for Medicare and Medicaid Services will never ask for gift cards, wire transfers, or your banking information over the phone. Social Security will never threaten to stop your check unless you pay a Medicare fee right now. If you receive any communication like that, end the call immediately and verify your actual premium and benefit status through an official government source. What we covered today is documented, confirmed, and already affecting the monthly deposits of tens of millions of Americans enrolled in both Social Security and Medicare. The standard Part B premium is $202.90. The surcharge tiers above $109,000 in income can push that number as high as $689.90. The 2-year look-back means income decisions you made in 2024 are determining what comes out of your check today. And the hold harmless provision may have absorbed a significant portion of your 2026 cost of living adjustment before it ever reached your bank account. Most Americans receiving these benefits have never seen all of those elements explained together in plain language. You now have the complete picture. Before the end of 2026, the Social Security Administration is expected to issue updated RMIA determination notices for beneficiaries whose 2025 income has changed, and I will cover that the moment it is confirmed. Subscribe and turn on notifications so that report reaches you before it affects your next deposit. Protecting your retirement income is exactly why this channel exists. Take care of yourself.